Hello again, everybody. My name is James Tantello. I will be your host again for part 2 of our 4-video series on how to navigate through Sims of portfolio analysis spreadsheets. So what we're going to be working at today is the diversification spreadsheet. The first thing that, let me move this out of the way. The first thing that I'm going to talk about is its relation to portfolio analytics. If you were to go to any of these cells, you'll see that it's bringing up a lot. It's bringing up the portfolio analysis or portfolio analytics spreadsheet in the formulas. These formulas are taken directly from our portfolio analytics spreadsheet. So a lot of this top part here is directly from that spreadsheet. And basically the purpose that this serves is to look at the breakdown of our holdings in terms of style, size, sector, geographic region, etc. So what I'm going to go through now pretty quickly is just a quick rundown of what you're going to find here. We're going to be only working with this spreadsheet today, this tab. So I guess the first thing to realize is that if you remember the portfolio analytics spreadsheet, all of these things, including the market price, all of these are already all on portfolio analytics. They're just read in a different way. So if you want to know anything about these different things, we can go to the other video, the portfolio analytics video, and learn a little bit about those things. And this number here matches exactly to what our portfolio analytics statement says. Now, as we move down here, I'm going to talk a lot about style and size diversification, geographical diversification, asset class diversification, our fixed income diversification, and lastly, our sector diversification. And we also have some graphs that break down these things a little bit better. So, first of all, we've got style and size. Now, if you remember before, style and size is one way to break up our securities. So this is taken from Morningstar, and they've got a 9 plot grid, basically. As you'll see here, each one of these rows is a different grid, is a different spot on that grid. So for any security, there are 3 different sizes: large, mid, and small. And for any security, there are 3 different styles that it could have. It could be a growth stock, it could be a value stock, or it could be a combination of the two, which would be considered a core, or a blend is another common name for that. So for example, a lot of our growth stocks are going to be younger companies, companies who are in technology or other sectors that really push a lot of R&D, a lot of growth, in order to stay afloat and stay out of bankruptcy. So that's what we'd be looking for in terms of growth. Value stocks, a lot of the financial banks and insurance institutions are value stocks. And core, you'll find that core can be a little mishmash of everything, whether it's tech, healthcare, some consumer discretionary and staples, and also some financial purchases as well can be part of core. So basically what these 5 boxes here that are inside the circle, what these do is they break down our portfolio weights in terms of the different diversification systems that we have. So this first one I said was style and size. And if you go over here to this dollar value, it breaks down all of our ETFs, which I'll get to a little bit later, and then adds all of those. So like I said over here, each company has a style and a size. When it's selected, it's put into these categories and weighted against the total value of the portfolio. And so these things are, this is what you're going to find in this section. Now, I think we said visual representations. This is what this is right here. This is our style and size diversification. You'll see large growth. We can actually zoom in a little bit here so you can see it. Hang on. So we've got large growth, core, and value. That makes up a little bit over 70% of our entire portfolio. So as you can see, this stuff can be pretty good analysis, especially visually for those who are more visual learners and those who can get a little bit more concrete data from visuals. It's always a good analysis tool to use. You can't just throw numbers at people all the time. So the second one I would guess we're going to talk about is geographical diversification. And this is basically where do our revenues come from? Let's say we're Apple. We would like to think that Apple is a North American corporation, a United States corporation, but in fact they do have sales in other countries on other continents. So we have a breakdown that we get via Bloomberg, and that gets input into this spreadsheet, and we add up these totals, and these totals all get moved over into here. So we're looking at about 67% North America, and as you can see over here in this asset, actually that's not the right one, and our regional allocation, those two are pretty close. So about 67% North America, and about 20% or so is going to be Europe, Middle East, and Africa. That would be EMEA. Actually, I think that's cash. Yeah, you're okay. You're right, that's cash. Europe, Middle East, and Africa is 8.525%. Asia after that, and then South America and Australia have a little under 1% of total revenues. If we keep moving down, it's getting a little bit more general as we go along. This asset class diversification, this is basically, we break down our securities into four different things. Well, three different things, and then we add a fourth, which is just cash, money we haven't invested yet. So one of them is equity, and that's what 68.5% of our portfolio is. That's your normal stocks. ETFs also are in the equity section, excuse me. Our options, our puts, and our calls are going to go under derivatives, and that's always very, very low percentage of our portfolio. It's under 0.1% right now, with only $140 out of 270,000. And then lastly is fixed income, and that's the bulk of our fixed income. Actually, all of our fixed income is in ETFs. So a pretty good segue there, if we move over, is duration and type. So in the same sense that style and size breaks down for our equities, our fixed income is broken down by duration and type. So there's three different styles, there's three different types. You have corporate, or two different types. There's corporate and government. So a corporate bond, would be something like IBM selling us, a 10-year bond, and we get, payments every year, or semi-annually every 2 years, or twice a year. Pardon me. Our government bonds would be anything like T-bills and treasury bonds that the government pays interest on. And just like there's a size, there's also three different types of durations. There's long, intermediate, and short. So our short corporate bonds are those that are going to be maturing the soonest. Our intermediate bonds are those going to be that are in between short and long, just like the blend is in between our value and our growth stocks. And our long, obviously our long-term bonds, usually over 10 years, I think. So we are not currently invested in any long fixed income securities. We have the majority of it in intermediate and 31%, 32% in short. And then lastly is our sector diversification. So besides fixed income, which this is basically sector and size here, our equities are broken down into 10 different sectors. So we've got financial, energy, tech, utilities, industrials, staples, discretionary, healthcare, materials, and real estate. And these again are broken down. You'll find this information up here. So, our basic material stocks, our energy stocks, our Chesapeake Energy, that's another one, Enterprise Products Partners, ExxonMobil, these are all energy stocks. These would all find their way into this dollar value right here as part of this. And we see the breakdown of that here in our sector allocation. And it's pretty spread. which is what we're looking for. So in all of these sections, you're also going to find a sim target. And what the sim target does is that shows what we want our weights to be. So for instance, we want our financials weight to be 16%. Right now it's 9.5%, so we're considered underneath our target, which is what this minus 6.84% is. It's just taking the difference between our target and our weight. Now, contrarily, our energy sector target is 11%, and yet we have 12.2%. So we're actually overweight in that one. We're also overweight in tech. So I'll go back to summarize this really quick. So you'll find all of these companies in our portfolio analytics. This is our current holdings. So just like our analytics, this shows our current holdings, current market value, and our total portfolio value. But it also breaks down our portfolio by style and size, geography, sector, asset class, and for our fixed income securities by duration and type. And then we also have some pretty pictures down here for the data that we've collected. And lastly, I'm going to talk about, you see how you have these parentheses up here at the top. And this is the case with all of them. So as you move down, you see that the numbers don't change all that much. And why is that? Well, that has to do with this over here. This is our ETF holdings breakdown. And we have 5 ETFs right now that are broken down into different sectors and styles and sizes. The BWZ over in the right, that is a completely fixed income one, so that one you're going to find over to the right. Okay, so our ETFs, the 4 that are broken down by style and size and sector are the SPY, which is the S&P 500, IWM, which is our Russell 2000, QQQ, which is the PowerShares NASDAQ, that's our tech one, and TLTD, which is our developing markets index. So I guess I'll just do QQQ as an example for now. So like I said before, that is mostly a tech. That's mostly a tech ETF, and you'll see that right here. So in terms of holdings, 63.97% or 64% is in tech stocks. The rest are broken into discretionary and healthcare. The healthcare makes sense being the second highest because it's a lot of technology is in a lot of the healthcare companies. And down here we have the style and size diversification. So these are also collecting from Morningstar, which is a really neat website. If you guys need information, I consider it better than Google Finance or Yahoo Finance. And so this is where we get that information. And those go into all of these holdings down here to give a pretty accurate reading of what our weights are. We don't want to be underweighting things, overweighting things. We want to be pretty exact with these things just to see what our weights are. We don't want to be too overweight because our bylaws state that we can't have more than 10% in any one ETF, no more than I think 5% in or 5 or 7% in a stock. So we have rules that we need that we are organized under, and those bylaws need to be met. So that's it for the diversification spreadsheet, and stay tuned for part 3, which is going to be our benchmark, and that's splitting up to be a pretty riveting video. So I'll talk to you guys later.